Hello everyone. This is tax preparation for college students and future graduates. So today I'm going to teach you guys how to do a simple tax return. And this is our example person to the right in this Excel file, John L. Smith. He's single, 22 years old, with no dependents. As you can see, his different forms of income come from a W-2. He had dividends, interest, some trades. He ended up winning at a casino, which is very possible since we all live in Nevada. And the 1098T and the 1098E is because he is a college student as of right now. And we're going to go over how this stuff affects you. All right. So the W-2, let me pull up the tax software. We are going to be using free file fillable forms. As you can tell by the title, it's free. That's why I wanted to use this one. And this is where you just put in your information, John L. Smith, random social, all this information is made up. And all the numbers are currently in. As you can see, these green numbers are my inputs, and the blue numbers are inputs from all the other forms on the left and from the numbers above. So we're going to go over how to get all these numbers. I wanted to put them in first. That way I can show you exactly how to get to each one without making a little mistake along the way. So we're going to begin with the W-2. Pull this back up. And move this over. Okay, so this is just random job information. All this will always be filled out. This would be your information and sent to you. Okay, so the wages, tips, other compensation, 44,000, shows it right here. Social Security wages, 48,000. So right now you're wondering, how come these two numbers are different? This is where you go down to box 12A, which is D. He put $4,000 into a 401k, so therefore he doesn't have the full $48,000 at the end of the year in his pocket. Even though he made $48,000, 4,000 of it is tucked away in a 401k retirement plan. As you can see, this is why it's checked right here. So, but his Social Security and Medicare taxes will be taxed on the full amount of money he made throughout the year, which was 48,000. So this 2976 is just 6.2% of 48,000. 696 is 1.45% of 48,000. You'll never have to do the math. The W-2s you get from your employer will have all the numbers you need. You just need to plug them in. So this 44,000 right here will then be on the 1040 in box 1. Not the 48,000, the 44,000, because this is how much cash he has in, say, his pocket right now. All right, let me pull up the PowerPoint. So I made it simple here. Box 1 includes wage, tips, other compensation, minus any amount put in the 401k. As you can see, box 3 and box 5 are amounts that just have the 401k included because that's how much you made, and try to make it as simple as possible to understand. We're going to go back to the W-2 real fast. And federal income tax withheld, you guys all know what this is. This is how much the government takes out of each paycheck. That way they have their money. So he has $3,200 taken out over the entire course of the year. All right. Now we're going to go on to dividends and interest. This can be found on the Schedule B, interest and ordinary dividends. So, a 1099 DIV. This is what the form looks like. You'll have total ordinary dividends, qualified dividends. And this, I'm going to teach you guys about qualified dividends because they are taxed at something totally different. Um, so he has $650 he made from a bond in dividends. So he's going to have $650 for ordinary dividends and $650 for qualified dividends right here. And for the 1099 INT, he made $400 from Wells Fargo in interest. So this will be on interest income right here. I'm not going to get too much into tax exempt interest from municipal bonds. We're just going to keep it basic and go over the fundamentals before getting to something totally more complicated. So we're going to go back to the Schedule B. As you can see, Wells Fargo, $400 for interest, and the bond, which is ordinary dividends, $650. Now you're probably asking, where does the qualified dividends go? Since I went over that, we're going to go back to the 1040, and taxable interest was the $400, qualified dividends $650, ordinary dividends $650, attached Schedule B. We were just on the Schedule B. So total ordinary dividends will be in box 1. I showed you that. They are taxed at your tax bracket rate. So that could be all the different tax brackets based on how much money you made from your W-2. So say this 44,000 was instead 120,000. You're now going to be taxed at something way higher. So this $650 will now be taxed at a increased rate. But because it's qualified dividends, they're going to be taxed at the 15% long-term capital gain rate. So this doesn't matter if you made the 44,000 or the $140,000 throughout the year. All right. And interest income will be in box 1. Showed you guys that. Back over here, interest income. Pull back up the tax software. Excel. So we're flying through this right now. We went over interest and ordinary dividends, and we went over the W-2 information. So we covered boxes 1 through 3B. Next, this guy doesn't have any IRA distributions or pensions and annuities. He's only 22 years old. It's possible, but he's just going to be a typical basic college student. Next, we're going to go over capital gains and losses, attached Schedule D. So as you can see here, he has some short-term trades and some long-term trades. I put the red for the basis, so this is how much he bought it for, and the black over here is how much he made from the trades. So we're going to go to Schedule D. So when you get to Schedule D, there's a form called the 8949. This is what covers all your trades. So all these numbers here, I didn't input. They were filled in. So we're going to go over the 8949 first. So we're going to start off with short-term trades. He had stock in Verizon. He acquired it 11/20/2018 and sold it 6/28/2019. So that's not a full year. Anything less than a year will be considered a short-term trade. And when something is a short-term trade, it's taxed at your tax bracket rate, like I told you about the qualified dividends. And when something is long-term trade, which is more than a year, it's taxed at the 15% long-term capital gain rate. But in this case, he had a loss, $750. He got 4,000. He bought it in 11/20 for 4,750. So he made a loss on this. Now we're going to go over to the long-term trades. And he had this in Apple. He bought it in 2017, sold it in 2019. This is definitely more than a year. He bought it for $5,250, sold it for $6,500, made a gain of $1,250. So this gain, $1,250, and this loss, $750, will now go on to Schedule D, which is all auto-populated once you fill out the 8949. As you can see, $750 loss and $1,250 gained. This is where you combine lines 7 and 15. As you can see, it does it all for you. $500 of gain. And this is where you start answering these questions. Are both lines 15, 16 gains? No, he had a loss for a short term. So skip lines 18 through 21 and go to 22. We're going to be completing the qualified dividends and capital gain tax worksheet towards the end to find out how much tax this guy, John L. Smith, will have to pay. So I'll show you this number again, $500. This will go on to the 1040 right here on line 6. Capital gain or loss, attached Schedule D. We have it right here onto the left for $500. Alright, let me pull back up the PowerPoint. So 1099B, there's two different ways of seeing this. I'll show you this form first, a 1099B. So this shows you when you acquired it, when you sold, how much proceeds you got, and your cost. Because he only had two of them, he had a short term and a long term for Apple and Verizon. He would probably just get two of these. But maybe one day when you have your own brokerage statement, such as Ameriprise, and you're a customer there, you will have an entire form that has multiple trades from this one company. All right. Now we're going to go to the W2G. Let me pull this up for you guys. This is certain gambling winnings. So I actually already have it inside of the tax software since it's one of the forms needed. So you'll be given a form like this. He won at the Grand Sierra Resort in Reno. John L. Smith, he got $5,000. He was playing on a slot machine. He won in 2019. That's important because this is for 2019 purposes. So this $5,000 right here will now go onto your Schedule 1, which is additional income and adjustments. So it's none of these. We're going to put it under other income, gambling winnings, $5,000. As you can see, it auto populates down to right here. And this $5,000 will then, so other income from Schedule 1, line 9, $5,000. So now all these add up to $50,550. So this is your total income made throughout the year before any type of adjustments, which we have next. All right, pull this back up. So box 1, go onto your Schedule 1 as other income, but you are allowed to deduct the amount of winnings against losses on your Schedule A. When we start getting down to standard deduction, I'll show you how itemizing could be more beneficial in a case like this. But like I just said, it's only available if you itemize instead of using the standard deduction. All right, so now we're going to do the adjustments. So student loan interest deduction. Let me pull back up this and this. So he got a 1098E with $2,100. That's how much money he paid on interest on his entire principal of how much loans he has taken out for college. So there is some implications when it comes to this, such as if somebody makes too much money, they're not going to be able to deduct the entire 2,100. And as of 2019, that like threshold you need to be under is $70,000. And as you can see, he's at 50,550. I think that's what it was. Yes. 50,550. So he's 19,500 underneath it. So he's going to be able to deduct the entire interest amount, so 2,100. This changes every year. There's going to be worksheets for it, but since we're keeping it simple, I just wanted to quickly go over that, as you will not always put the entire amount once you start making a lot more money. So this $2,100 goes right here under student loan interest deduction, and this are your adjustments. So let me show you what a 1098E looks like. So you have your student loan interest received by lender. This would be $2,100. It'll tell your account number, all your information here, all the wherever you're paying your loan to. Just basic stuff that's already filled out for you. All right, let me pull this back up. So I want to show you guys the Schedule A real quick. Hold on. So, okay, let me show you this first actually. So adjustments to income, that $2,100, that leaves you with $48,450. So this is your new adjusted gross income. So now the standard deduction or itemized deductions. So in this case, he's going to be using the standard deduction of 12,200, but I want to show you guys the Schedule A as I inserted some information to show you how different things work. So he's 22 years old. He doesn't have any medical or dental expenses. He didn't go to the dentist this year. He currently has a house he lives in, and he paid $1,500 in real estate taxes for it. And he had a home mortgage interest of $2,500. So this goes keep going down. It shows gifts to charity. He paid $100. He gave $100 to a young youth sports team. And gambling losses to amount 1. So this right here, because when you gamble, you typically lose more than you win. That's just the natural rule. So this $5,000 that he won in gambling winnings will go here as he can write it off. But as you can see, this 1,500, 2,500, 100, and $5,000 only goes up to 9,100, and the standard deduction this year for 2019 is 12,200. So it is not advantageous to take the Schedule A deduction. It is better just to take the standard deduction. So this is where you take the 48,450 minus the 12,200, and will give you taxable income of 36,250. All right. Now we're gonna calculate tax. This is on the more difficult side, but I'll try and go through it as best as I can. So these are the instructions for the Schedule D tax worksheet. So because we have qualified dividends, like I said earlier, they're taxed at the 15% rate. And same with long-term capital gains, they're at the 15% rate. And everything else will be at his tax bracket. So this is where you just start filling out information on this worksheet. You'll get it off the IRS website instructions and go over it. So it's like enter your taxable income from line 11B. 11B, 36,250. And enter your qualified dividends from form 1040, line 3A. That was the 650. And this is where you just continue to fill it out. Enter the amount from form 4952 for investment interest. He didn't have any of that. No investment interest. So it subtracts it. That's 0. So for line 6, subtract line 5 from line 2, which is just 650. All right. So you pretty much just fill this all the way out, all the way down. You just keep entering the smaller of line 1. So if you're single, you enter this amount. But I want to show you the very, very end because I'm pretty sure you guys can just multiply line 39 by 25% and add lines 10 and 21. Like, it's not too difficult as long as you stick by the rules, but I want to show you why this is a better way to find your tax. So in line 44, which is, so if the amount on line 21 is less than 100,000, we're going to use the tax table. So the amount on line 21 on my cheat sheet that I already did for it was $35,100. So we're going to go to the tax table and find 35,100. So this is the amount of tax right here, 4021. Okay, for single. I just wanted to show you guys for single, it would be 4021. And then on here, for line 46, it says figure the tax on amount for line 1, which was 36,250. So we're going to go to 36,250 now, which is up here. 36,250 right here. That's 4159. So 4159 versus the 4021, the 4021 right here. It is about 138, so it's $138 more. So that is how much we're saving on tax this round because of our qualified dividends. Yes, we understand it's not that much and you have to fill out this large and lengthy worksheet, which has 47 boxes. But at the end of the day, when you start having more dividends that are qualified and you start having more trades that are at the long-term capital gain rate, and up here with the Form 4952, which is investment interest and stuff like that, and you get a deduction, you end up saving a lot of money on tax by using this. All right, now we're going to go back to the tax software, and we take the 4021, which is the lesser of the two, and this just autofills down. So now we're going to get to the Schedule 3. This is a credit. Credits are good. So up here, a deduction decreases your taxable income. So that's how much you get taxed at. But a credit will so this amount of tax you owe, 4,021, this credit will completely start decreasing the amount of tax you have to pay. So a credit is always better than a deduction. All right, Schedule 3. Yeah, so Schedule 3. Additional credits and payments. So this just tells you education credit from Form A863. This is what I'm going to show you guys next. This is a non-refundable credit. So if this was more than the amount of tax you owed, you would not be getting the money back compared to a refundable credit, which the 1098T will show. So let's go to the 8863. So for the 8863, it's a different kind of form. You start on the second page rather than the first page. And this is where you fill out your information. John Smith goes to University of Nevada, Reno, social. All right. Was the student enrolled half the time for at least 1 year? Yes. Did the student complete the 4 years of post-secondary education? No, he's currently in his senior year of college. And was the student convicted? No. So we're going to go back and look at the 1098T. So he paid $4,337 this year for qualified expenses. Let me show you what this looks like. So right here, payments received for qualified tuition and related expenses. That would go right here. This will show any scholarships or grants you received. Check if it's a graduate student. This would be for the lifetime learning credit. And so if this is checked, it would be completely different, but we're going to be using the American Opportunity Credit since most of us are within our 4 years right now. All right, let's go over here, see if there's any information that I missed. So yeah, I'll be going over the American Opportunity Credit, which is a better credit. All right, tax software and Excel. So adjusted qualified education expenses, don't enter more than 4,000, but he had 4,337, so you enter the 4,000. You subtract 2,000, this all goes down for you, and so if line 28 is 0, it tells you this, otherwise, but it does the math all for you. So now we go to the first page. Remember this 2,500. So the 2,500 right here, this is where you enter $90,000 because you're single, or if in your case, if you are married, you will enter the 180. All right, so this wants you to get the amount of money you had on line 8B. So let's go and get that number. 48,450. You literally just remember the number, write it down somewhere, bring it back. 48,450. And then so now we go down. So you subtract the two right here, does the math for you. Married, 10,000 if single. Sorry, this should be 10,000. Doesn't change anything because this isn't greater than this. But enter this. So this does it all for you. And this is the refundable American Opportunity Credit. So you get $1,000. And this $1,000 will go over here. American Opportunity Credit from Form 8863, $1,000. And as you can see, because of the amount that was on Schedule 3 that we're going to go over, this 1,500, these subtracted is the 2,521, so that's how much tax is left. And so your total tax, 2,521. And so federal income tax withheld from W-2, right here, the $3,200 will go right here. This is how much we pay to the government throughout the year. So before that, as you can already see, we already covered our taxes, but we're going to end up getting refunded for this American Opportunity Credit because this is already greater than the amount of tax we owe. So I'll show you how that works. Let's go back over here. And this was for the non-refundable credit, which is that $1,500. So subtract line 8 from line 7 on the credit limit worksheet. Let me pull that up. So this credit limit worksheet, enter the amount from form A863, line 18. Sorry, wrong one. So line 18, which was 0. And then, okay, let me start this part over. So you subtract line 8 from line 7, gives you the 1,500. So this goes on line 2 of your credit limit worksheet, right here. I skipped over this part. This right here is going to be 0, and this is going to be the 1,500. So you add these together, which is 1,500. But to get down to the 0, you just enter the 68,000 if you're single, the amount from line 8B, which we did up here, the 48,450, and the $10,000 if you're single, and you will get 0 right here. Okay, let's go back to that credit. So line 4, which was enter the amount from line 12B. As you recall, this is how much tax we're paying. 12B, 4,021. And then you subtract lines 5 from 4. So this is enter any credits you have from lines 1 and 2, but the only credit we will have will be this non-refundable one. I'll show you guys real fast. So this is a foreign tax credit. We're not going over this. Credit for a child or dependent care expenses. John L. Smith doesn't have any kids, so this isn't important. So that was for lines 1 and 2. And then you subtract line 5 from 4. So because there's nothing on line 5, which is 0, and this is the 4021, line 6 will be 4021. And then we're going to enter the smaller of line 3 or line 6. So line 3 is 1,500, and line 6 is 4,021. So we enter the 1,500. So this, it actually tells you here. Here we'll go on for line 18. So let's go back to here. Line 18, the 1,000, or on line 19, the 1,500. And this will now tell you to go and put it on Schedule 3, line 3. 1,500. So this will then, once you click do the math, it will auto-populate to the 1040. Right here, the 1,500. Add Schedule 3, line 7, and line 7 and line 13A, and enter the total. So, alright. So, where are we now? So the American Opportunity Credit, the $1,000, this was from right here, this line 8. This is refundable, as you can see right here. So no matter if all your tax is already covered, you will automatically be getting this $1,000 back into your pocket for going to college. All right. So go back to here. And so you add lines 17 and 18E. So this is all the different type of credits you can get, but we're only going over the American Opportunity Credit. So this 1,000 plus this $3,200 that was withheld throughout the year from your job now equals $4,200. So 4,200 minus the 2,521, that's how much tax you have to pay for the year that's left to pay, equals 1,679. So therefore this is how much you're going to be refunded. And this is where you just enter your routing number, account number. It's going to be more serious. And if you want to apply it to your 2020 estimate, but that's when you start having more crazy tax implications. Right now, you want the money back right now. It's better to be in your pocket than the government's pocket. So this would be 0. And just like that, we're finished. This is now where you can just check e-file status, but of course this isn't a real person, so it's not going to work. And we'll go over the PowerPoint. I want to go through it one more time with you guys. We went over the W-2. I want to show you guys all the information. We're going to go over it real quickly. The 44,000, you remember, it's right here. All right. We went over the dividend interest. I showed you how the qualified dividends will be different because of the Schedule D tax worksheet. So this is for qualified dividends and long-term capital gains for the 15%. You fill out this worksheet. It's pretty simple. It's literally just telling you to grab one number from another line and so on. All right, interest income. 1099B, we went over that. That is for the Schedule D and all the different trades. And the Schedule D leads to the 8949. Let me refresh your memory. So Schedule D, all these numbers are auto-populated because you filled out the information on 8949. So short-term trades and long-term trades. Long-term again is anything for more than a year. Short-term, anything less than a year. All right. The W-2G, that is because he won $5,000. 1098T, this is what you get for any money you paid for qualified tuition and related expenses. The 1098E was the amount of interest paid on your principal of a loan. And that's it. I hope everything helped. And thank you for watching.